Numbers from USDA. Michelle Rook has more on what to watch in the week ahead with today's Markets Now.
Grains closed mixed on Friday after the WASDE report. Jim McCormick with AgMarket.net joining us. Not a lot of big changes in the report on Friday, Jim, but it was a reminder that this supply situation is not getting smaller, it's still getting bigger.
Exactly. Unfortunately, the government had to make the adjustments they did. Exports have been disappointing the last couple of weeks. They essentially acknowledged it, cut exports by 50 million on the corn. They did cut imports a little bit. The net effect of 35 million increase in carryout. The world number got a little bit bigger as well. So, plain and simple, Michelle, that's not bullish when carryout's growing. It shows you that the prices need to go lower to stimulate demand.
So do you think at this point USDA is still overestimating demand then?
For the old crop, I think they're in line right now with the adjustment on the June WASDE. I think they're getting very close to it. For the new crop balance sheet, I think there's still adjustments to be made. The reality is they're looking for they're currently using a very big revision up on exports, over 375 million, I believe. Same thing on the feed side of the equation. So those two combined categories, increasing demand year on year over 700 million, just seems unlikely. So I would expect for that demand number to be revised lower down the line. And I think what will happen is they will correspond the revision of that demand lower as they revise the supply lower due to the drought we're seeing in the Midwest.
Yeah, how much of a drop though in supply would we need to have to overcome these demand figures being lower?
Well, the reality is right now, you could essentially drop the national yield 8-9 bushels, and that would be a little over 700 million reduction in supply, which essentially, if you did that, you could cut feed and residual demand, leave it unchanged year on year, do the same thing for export demand, leave it unchanged year on year. They'd offset each other and you'd be back to the same ending stocks. So the reality is you probably got to get a yield below a 10 bushel drop before the market really could get really concerned.
But the rally in beans on Friday, Jim, was not due to the report. It was soybean oil, wasn't it?
Bean oil is what the exciting thing is right now. We're seeing a lot of money come back into the bean oil. It's a renewable industry talk is getting exciting again. We're actually exporting beans to Europe right now, Michelle. They're crushing those beans, keeping the meal over there, and they're bringing that oil back to the U.S. either via straight oil or potentially diesel. But either way, being the fact they're crushing U.S. beans, they get a RIN tagged onto those beans, and that makes that economically justifiable to do.
All right. Thanks for joining us, Jim McCormick with AgMarket.net. We'll have more Ag Day coming up.
To contact Jim McCormick at Ag Market, call 844-4AG-MARKET or visit their website at www.agmarket.net.